All right, good afternoon, and thank you for joining us for session number 8 of our 10-part series on the top 10 scams in Delaware. My name is Rhynn Evans, and I'm a paralegal here at the DOJ. I'd like to welcome Katie Devanney, one of our Deputy Attorneys General, and Tiffany Williams, a paralegal, who will be talking about consumer credit scams with us today. So Tiffany is a University of Delaware graduate and currently a second-year law student at Widener Law, Delaware campus, which is also where she earned a paralegal certificate in 2008. She has a background in residential foreclosures and also years of collections experience with various creditors for products like credit card debt, student loan debt, and landlord-tenant lease agreements. Katie has been a DAG in our Consumer Protection Unit since September after coming over from the Investor Protection Unit. She currently oversees our Debt Management Services licensing program and is very interested in debt relief issues generally, including debt collection and credit repair. So just as a reminder to viewers, if at any point you have any questions for Katie and Tiffany, be sure to drop them in the comments below. And without further ado, I'm going to go ahead and pass it over to Tiffany.
Thank you, Rhynn. I'll be speaking briefly about credit in general, just to go over things that are important to consider while protecting yourself from scammers in these days and times. Now, regardless of how debt happens, scammers who promise to repair your credit or eliminate debt for a fee is simply a promise that cannot be kept. Scammers these days like to entice victims with guarantees such as credit score increases, debt forgiveness, all for an upfront charge. And ultimately, once they collect the fee and are paid, in a lot of cases, they simply just don't deliver on what they promise. Some ways scammers find potential victims is via online ads, social media pop-ups, unsolicited phone calls that I'm sure we're all aware of these days. When a person is faced with deciding to pay a bill or buying their necessities, these messagings about guaranteed better credit scores or alleviating your debt and getting better financial positions is tempting to pay these fees, but it's not always the right decision to make. As you have noticed or may have noticed during these unprecedented times, these web-based scams are at an all-time high, making it that much more vital for you to understand what your credit is and how you may protect it. Your credit matters greatly. It affects your ability to get a loan, to get a job, housing, insurance, and more. While there are some legitimate credit debt counseling organizations out here, the best way to protect yourself from third-party credit scams is to never blindly click on a pop-up or provide your personal information to an unfamiliar company without verifying or looking further into it. The first line of defense in every case, quite frankly, is to proactively work with your creditors directly, because you know what debts you've created, you know who you started with, and you can always know who you're dealing with if you start with them first. Now, just a bit for you to understand what your credit is. Your credit report contains information about where you live, how you pay your bills, and whether you've been sued or filed bankruptcy. And the credit reporting companies takes that information and they sell it to creditors, who then in turn use it and influence your purchasing power with that information. That's what makes it so vital that you are in touch with the creditors, in touch with the credit reporting agencies, and aware of your current credit standing. You do have rights. It's essential that you know your rights. The federal government governs fair credit reporting through the Fair Credit Reporting Act, promoting the accuracy and the privacy of the information that is provided through the national credit bureaus, the top three, TransUnion, Experian, and Equifax. You have the right, just to go over some things that you may or may not know. I mean, this information is circulating, especially with us, all week long, and it may have been stated already, but just to reiterate, you have the right to a free credit report, and they're every 12 months and for other circumstances as well. And there's nothing that a credit reporting agency or repair company or debt management company can do for you that you're not able to do for yourself for little to no cost at all. In situations where you have any adverse action against you on your credit report, denied for anything, you have the right to a free credit report. In those cases, the creditor that has denied you will supply you a written notification of that and the credit reporting agency they used in making that determination. In cases like that, again, you're eligible for a free credit report. Every 12 months, you're just eligible just to get a free credit report. If you are unemployed and seeking employment in the next 60 days, you are eligible to a free credit report to see what your stance is, because again, that does affect employers' decision-making and when deciding on giving you an employment opportunity. Just some quick tips to go over just to help you these days that I'd like to apply is don't believe everything that you see. Okay, scammers have a lot of little ways that they can present themselves online and on the phone to show themselves as official when they're truly not. So don't believe everything that you see. Don't ever believe guarantees that a credit repair company or debt management agency gives you, because no one can guarantee anything without first looking at your personal financial position. Again, you always have the option to take the steps and proactively do it for yourself. But in cases where you're feeling overwhelmed or just not capable of making that budget, or you need an extra hand, there are some reputable credit management and debt management companies out here to help you. And I'm gonna hand it over to Katie, who's gonna go further into detail about things to look out for when dealing with those companies head on.
Great. Thank you, Tiffany. So as Tiffany explained, there is an industry of, we call them debt management services providers. And basically, there's really two branches of debt management services. The first one is what I'm going to call a settlement type of service. And the second one is a plan-based debt management services company. So a settlement company essentially operates as a type of savings account for you. So you enter into this contract with the company, and instead of making your monthly payments to your creditors like you've been doing, instead you'll make one monthly payment to that company, and they're going to hold on to your money until you have enough saved up, at which point they're going to start going to your creditors and negotiating settlements of your debts. So everything that's enrolled, they're going to start reaching out to folks to talk about, will you accept this percentage or that percentage? Plan-based debt management services are a little bit different. In those cases, the company's service consists of reaching out to your creditors and trying to secure concessions. So maybe a lower interest rate, or we'll eliminate some late fees, or we'll give you some other benefit or something that helps you manage your debt, get ahead on your debt, pay off your debt. So those are the two main models. In either case, in Delaware, a debt management services provider must be licensed by the Attorney General. So we have a whole process. There's a form they have to complete. We look at their agreement, their financials, a whole checklist of things that they have to do to get licensed by us. We keep a list of the active licensed providers on our website. I believe there should be a link to that list, but you can also always ask us if you're uncertain, consumer.protection@delaware.gov. We're happy to take a look. If something doesn't feel right, definitely happy to double check if you have any questions about that company. But first step should always be, is this provider licensed by the Attorney General? And if they're not licensed, that should be a huge red flag. And we certainly ask that you let us know, and also recommend that you do not use that company. If they're not licensed, there's probably a reason that they have not tried to obtain licensure with us. Assuming it's licensed, something that you're going to want to do is you're going to want to make sure that you understand the fees that these debt management services providers are charging. So there's two, just like there's two general types of debt management services, they have two generally different fee structures. And I say general because your contract may be specifically different. I'm going to use the maximum fees that are permissible under our Debt Management Services Act. If the fees that you see in your contract are higher than what I'm about to describe, again, you should absolutely let us know. That's a problem. So for a debt settlement company, the maximum fee that they can charge is up to 18% of the enrolled debt. And that generally becomes payable when the debt is settled. So something I want folks to think about when they're considering these companies is that under this fee structure, it may not matter how much the company actually saves you because their fee is based off the amount of debt you enroll. So to use an example, if you have $10,000 of unsecured debt that you enroll, the maximum fee under the Act is $1,800. That's regardless of whether that company negotiates you a great deal of 10% payment on the dollar or a 70% settlement. Your fee is determined based on that principal amount of debt that you enroll. So something to think about. In a plan system, it's a little bit different. In those cases, your fee is actually determined by creditor. So a provider can charge $10 to creditor up to $50 a month, and you would pay every month. So it's not like a settlement where you only pay when the debt is settled. This is just ongoing, stop anytime, and then you're done, but you're not getting your fees back that you've already paid. So to do an example of a debt management services plan fee structure, if you have 3 creditors in the plan, $30 a month, $10 per creditor, that makes sense. 5 or more creditors, it's still capped at $50 per month. So think about, your long-term goals and how much this is going to cost you, over a year, over 2 years. When you're thinking about, what fee structure you want to do, what type of debt management service provider you want to engage, these are things to think about. Similarly, don't rush into signing any of these debt management services contracts. I've seen a lot of folks who, they see somebody they think they want to sign up, they want to get this problem resolved as quickly as possible. My suggestion is always to take a step back, take a deep breath, look at the contract from one company, and then start going around, look at some contracts from other companies, compare the fees that these companies are going to charge you. And one of the things I want to highlight here that we've been seeing quite a bit lately is that some companies require you to use their bank, and their bank may have a monthly service fee charge. Take a look at that. That's, that $10 a month is $10 a month that's going to the bank and not your creditors, if that's the case. Make sure you understand those types of fees that are not direct to the debt management service provider, but that are still not helping you get your debt paid off as fast as you may like to. Compare how long these programs are going to take to complete. I've seen some programs last 50 months. Sometimes they're going to tell you, we think we can get this done in 21 months. Think about what your long-term goals are and how this plan, in conjunction with the monthly payment, or if you're doing a settlement, what that settlement payment is going to be. How does that fit into what you want to do? What are your money goals in that period of time, and how does this help you achieve them? Another thing, call up a few companies, talk to them. The customer service that you get before you enroll is never going to be worse than the customer service that you are going to get if you actually enroll. So make sure that you can get somebody on the phone when you call, that they're nice, that they're helpful, that they want your business and answer your questions. You can probably get a pretty good sense just from calling around that these businesses are run very differently, and who could you see yourself, committing to for a several year period to get this debt resolved. Just what's your general impression of the company? And, another thing that I would recommend while you're contemplating your options would be Googling these companies. Have there been complaints? Are there any lawsuits or judgments? What has been said on the Better Business Bureau? What about LinkedIn? There's social media, Facebook, anywhere that you can go and just search for a company's name and just see what people are saying if people are generally satisfied, who runs these companies? What other companies have the people that are running this company run in the past? Did those other companies have good reputations? These are all things that, you may want to look into before signing a contract, because, you do have, under the Debt Management Services Act, a 3-day window to cancel. But after that, if you're on a monthly payment plan, your $50 a month or whatever it is, you're not going to get that back. So it's best if you go into this eyes wide open, know what you want, and understand who it is that you are about to engage for these services. Those would be my recommendations for engaging a debt management services company.
That's really great. Thank you, Katie and Tiffany. This is really good information. I'm curious, can you speak to what we could expect to see in 2021 in terms of consumer credit scams?
Well, I think we're going to see a lot more of them, unfortunately. I think that the pandemic has, unfortunately, for a lot of folks out of work, maybe for the first time falling behind on bills, there's an urgency, I think, to get back on track. You get back to work, you want to get everything under control as quickly as possible. And unfortunately, there's a lot of predatory companies out there that are, I think, looking to seize on this moment and looking for people who are down on their luck, trying to get back together. And, they want to prey on you while you're emotional and while you're upset about it. So I would expect to see, the good actors. I think they're going to be stepping up, and I think they're going to be very busy. But I unfortunately do think we're going to see some less than honest companies cropping up in this space as well.
And where can viewers make a complaint if they are concerned about an unfair mark on their credit report or a debt relief company?
Well, you can always start with the company first. If it's a reputable organization, they care about their mistakes, they care about doing the right thing, and they want their customers to be happy and refer more business to them. So that would always be my first recommendation. See if you can get something done, if they'll credit you or whatever they need to do. After that, report it to the Consumer Protection Unit. We act most efficiently when we get multiple complaints from multiple people about the same company or the same pattern of behavior or the same issue. So it may seem like a small loss to folks, and I've seen this happen where it's $100 that, that's the model, is to take $100 from people because it's so small that the companies know, people really aren't going to do that much work to get that $100 back. But when we start getting 6, 7, 8, 9 complaints of the exact same story and the exact same fact pattern, we're going to start an investigation, and we're going to look for not just for those 9 people, but who else is out there. And I can tell you there was a case where it was a loss under $200. We got a few reports, and through our investigation, I think we located over 500 victims through these reports that we got, that individually, I don't know that anyone would have pursued it, but en masse, we're able to go after bad actors with the information that we receive. So nothing is too small. You may think that it's a one-off, or, maybe you think that you did something wrong. No, give it to us. Let us look at it. Let us look at the other information that we've received and see, is this something bigger going on, and what can we do about it? Finally, reportfraud.ftc.gov. Great website. The Federal Trade Commission, always interested in bringing down bad actors in the debt relief space. You can submit a complaint to them. They do a lot of good work here as well.
Great, thank you very much. And those links are going to be in the comments for folks, so be sure to take a look at those.
I'd like to make an additional point before we go. Just to piggyback off of the point that Katie made with the distinction between debt management companies and credit, counseling companies who actually make those increment payments monthly as opposed to like a settlement. I just wanted to reiterate that with specific information that if you're under 90 days past due on a bill, it would behoove you to take the initiative to reach out to your creditor directly to make an arrangement. No company, no matter what form of company it is going to dictate what a settlement arrangement will be. It will be determined by the creditor directly. And creditors tend to not step into negotiating about a settlement until you're greater than 120 days past due and heading into charge off, which would be a greater damage to your actual credit. So if you fall within 90 days past due, you can easily turn that around with monthly timely payments, as opposed to going to a company, paying additional money for them to step in as a third party to negotiate a settlement that they do not control. And ultimately, in a lot of cases, as I've seen when I worked in collections, they hold on to the money, they do a power of attorney, they stop communicating with the creditor until you fall all the way past due and go to the point to where the creditor is willing to settle. And at that point, you've completely damaged your credit to a point where it's going to take that much longer to turn it around. So I just want to reiterate, even though there are reputable companies out here, if you were to go to someone for help, I would probably encourage more for you to go to someone who's going to negotiate a CCCS type of payment, consumer credit counseling type of service, as opposed to a settlement company, because ultimately they're not doing anything that you can't do for yourself.
Great, thank you very much, Tiffany. So that pretty much wraps up our session. Thank you guys both so much for your time. I really appreciate it. This has been really informative. Like I said, make sure you check out the links in the comments below, and please tune in for the next segment on privacy data and cyber threat scams, which is tomorrow, Friday, March 5th at 10 a.m. Thank you everyone for joining us, and have a great afternoon.
Thank you, Rhynn.